Happy Friday, happy Friday. Today we are going to talk about Future Friday because finance and business is my area that I work in. I wanted to add some tangibles for you today, but the discussion for today is going to be about risks that is sitting on the corner waiting to affect our finances, especially in the future. So let's go over a few risks that you need to look into. Number one, most people miss is longevity. We all don't know how long we're going to live, how long our life is going to be. So planning for your future, longevity is a key. What are the two things you need to look into? Number one is long-term care. Are you prepared enough when you get old and needing the care, you'll be able to stay at your own home? Number two is the market risks. When you get to the age that you need to get, do you know what account to use to transfer your funds in a way that they are no longer in a risk of the market? One of the accounts I can urge you to go read about is fixed index annuity. It's very good in protecting your money from losing from the market. But you have to know what time to be able to get into, what account to get into. Number two risks that we have is our ability to understand our finances. Believe it or not, most of us get advices from financial advisors, but ourselves do not take the time to actually understand what our portfolio is made of, what are the things that we have in place that's going to affect in the future. In this area, one thing you need to consider is taxes. When are you going to pay taxes? Are all your account paying taxes at the same time? In this case, if you're looking for future retirement. So if your account in an account where they're going to pay taxes in the future, you want to reconsider restructuring your portfolio now before that time comes. So you can have a bucket of where you will have tax-free money coming in. That will help you to balance out your taxes. Number three, the risk of wealth transfer. Most people don't plan accordingly when we're no longer here. Now, we all know we have assets, we have things that we want to leave behind. So if we're not properly structured to leave all our assets to our loved ones, it's going to go through a probate court. So one thing you need to do in this area is understand your rules and the rules of your state when it comes to probate court. Once you understand those rules, you need to put things in place to bypass that. So what are the two things you can put in place? Number one, believe it or not, you need to have adequate life insurance. Number one, believe it or not, you need to have adequate life insurance. Why is that? Because life insurance is an immediate estate when you pass away. Your loved one's going to need enough cash to be able to recover all the assets that you have that still owes somebody. Number two, that you're going to need in this area of probate is will and trust. Because if you have a will and you have trust, you will be able to actually designate where your assets should be going. Put the rules in place how your assets is going to be used. Most of us, we strive to pass to generation to come. But if you don't have a document put in place, you can rely on people's behavior on the money to be able to go to the next generation. So those are the things that I wanted to cover today. If you need more information, you need more education in this area, absolutely reach out to me. Let's do one-on-one. I'm happy to share information with you to see where you can take your Future Friday to another level. It's Moshi-Malloda. Until next time, have a good Friday. Bye-bye.